Hello, stock investors, stock traders to the Nvidia watch party. My name is Victor and I'm joined by Daryl, my colleague. How you doing, Daryl?
I'm doing great, Victor. It's good to be here. I hope you're doing wonderful.
I
Good
am
to see
pumped up,
everyone.
Daryl.
All right.
Nvidia, this is the Super Bowl of earnings reports. This is the one that gets everyone really excited. There's a lot of eyeballs on Nvidia as we speak. The market has closed, and Nvidia is going to announce in roughly 20 minutes. It gives Daryl and I some time to take a look at this awesome business, look at it from a fundamental perspective. What have they been doing? What are they expecting to do? What kind of profit are they making? It's incredible to see their margins. It's incredible to see their profitability. It's incredible to see their growth. What's also incredible is their stock price. It has been flying high. It is looking like it's going to close at $186.52. For the 1 year, it's up 26.88%. Year to date, it's up 38.89. This stock has just made it happen for investors. It has just flourished and made investors wealthy. Nobody's going to argue with that. And it's done it the old fashioned way, which is by having a technology, a GPU technology that's better than anybody else at the right time, which is we have this AI build out. And those that want to have the best large language models, companies like OpenAI, Google with Gemini, Anthropic, and others that want to have the best large language models. They want to have the best AI play possible. They want that high performance computing that NVIDIA has to offer. So they're buying up GPUs like crazy, and NVIDIA is making lots of money to the point where I love their margins are just incredible. Let me take you through their margins. Now, a big business tends to have margins that are a little lower than 75%, but these guys, gross margin after their product costs 75%, profit margins 55%. Man, incredible. Free cash flow yield 46%. These numbers are make believe, but they're real. That's what makes the stock so incredible, and that's why the stock's been going up so much. This is the full year comparison, and you see that they really took off as the market realized, hey, AI is taking off. Businesses are really interested in having large language models. They're interested in building an AI ecosystem, an AI economy, and everybody started to buy this infrastructure. NVIDIA's revenues have pretty much gone from 16.6 billion up to 130 billion for the full year. Looking at the quarterly, they continue to grow. They're going to be a $200 billion revenue company in the next quarter or two. And then after that, they're going to keep rising. So these guys, they got to their position by having such great technology. And looking at their forecast, their year ends January 26th. So we are in the year that's going to end in one more quarter. They're reporting the quarter that ended, I imagine, at the beginning or at the end of October. So they're reporting it now. And for this year, they're going to grow at 61. Next year, they're growing at 37, and then coming down to 24. And then eventually, when everybody buys all the GPUs they need, they're going to grow at 4%. And their profits are going to go up substantially. So they're going to be making profit levels that are going to bring down their PE ratio down to the 20s. Investors want to see that because you can't have an elevated PE forever. So these guys, their PE ratio is going to come down. And I think that's why investors are buying up NVIDIA. They see that PE ratio getting to the 20s. They want to have a good position in this stock. Your thoughts initially on NVIDIA, and I'll give you the screen, sir.
Well, there's a couple of pieces of data that I've collected. One is the implied move. So the implied move based on the options that expire this Friday, the implied move is 7.6%. which is about plus or minus 12 to $14 or so. They do have a short interest of only 0.98%, so that's not anything.
That might just be Michael Burry.
Yeah, exactly. Nothing to worry about. I do have some holdings where this is quite a bit higher, so I like to keep a eye on the short interest going into earnings. Nvidia is pretty negligible. I also want to keep an eye on their gross margins. So you can see the gross margins from Q3 of 2024 up to Q2 of 2025, and how they decreased down to 60 and then picked back up to 72. Jensen had said he wanted to get back to the mid 70s at some point. We'll see if he's able to achieve that. One other interesting data point based on options is the max pain level. So this is the point at which market makers pay out the least amount of the in the money call or put premium, and that's at 172. So we closed at 186.52 today. For them to pay out the least amount in options this Friday, it would need to be driven down to about 172.
Very interesting. So they, judging from the implied move, the stock could move quite a bit, right? Plus
Yep.
minus 7.6. It's not, we're expecting some volatility. We're either expecting some cheers or some tears, one or the other. And hopefully it's cheers, but we'll see. We'll see.
Yeah,
And if you've done so
just
already,
a little over $14 if that implied move came into play.
and on the chat, if you haven't done so already, put down what you think is going to happen. It'd be fun to see who's closest to the pin, so to speak. And it looks like we have over 2,500 people on the stream, and the dial keeps going up. Keep on coming in, everybody. Join the party. Join people like Paul, who's a member. Good to see you, Paul. Good to see Sam. Good to see one of our newest member, Smith and Wesson. Thanks for putting yourself out there. It looks like you think Nvidia is going to rally higher, and it rallied nicely today. So going into the earnings, there's some pretty positive sentiment. And then another member became a YouTube member, Jose Contreras. Very good to see you, sir. Thanks for joining the watch party. Looks like Peyton is in, beat and raised, but the stock sells off by 0.5%. All right. I think they're going to beat. I was telling Daryl earlier, Nvidia is going to have good earnings. They're going to be incredible. They're going to be like, here's the good news after the good news, and let me tell you about some more good news. And I think that's expected. And it's just really how are investors going to react? Are investors going to buy in more? Are they going to maybe take some profits? I don't know. That's why I'm here. I'm here to watch the party, man. Peter, how are you, sir? We've got Europe being represented by Peter to this point. No, I take that back. We've got Europe all over the place. We got Shadow Guy coming in, not officially in Europe, but out there, just a part of that continent. Thanks so much for joining. Looks like we've got a lot of new people. We've got off the chart. We'll see. It'll be fun to see a stock just take off. And it looks like some people are rallying for some green numbers. Well, get your lucky rabbit's foot out. Get whatever you need to make it happen. Get your rally hat on if you're a baseball fan. You tell me what you're going to use to make the good mojo come to Nvidia. Let me tell you, they don't need a lot of support. They've got a lot of, so Nvidia, here's a list of super investors that own Nvidia. And there's some really great names here. Chase Coleman, this guy is the real deal. He's a super investor, famous investor. He's killing it this year. He owns Nvidia, owns $2.2 billion in Nvidia stock. He's the biggest investor out of this famous list of investors. Another investor that's killing it this year is David Tepper, smart enough to own $354 million of Nvidia stock. Poland Capital is in there. What are other names that I think are good to point out? And I think this investor here, this is Jensen Wong, I believe. I think this is his own family office, and they put the stock in there. So it's the CEO of Nvidia themselves. So a lot of smart money's in the stock. A lot of smart money. I know that some stories have been told of some investors like SoftBank sold their position in Nvidia. That was interesting. They had a pretty big position. They sold out. Of course, Michael Burry came out and said, "Hey, I'm shorting Nvidia." I think he was shorting Nvidia and Palantir, right? So he became the target of some pretty big comments from the CEO of Palantir. I don't think Nvidia said anything about it. They're like, whatever, we're Nvidia. We don't need to respond to that. So we'll see how the earnings come out. The earnings are going to come out in about 9 minutes. We're ready to go. Let me go through my valuation real quick and tell you where I'm at with a valuation of Nvidia and how this business is just incredible. The cash flows they're generating are so impressive, and I expect they're going to continue to drive high free cash flow. But I can't get up to their stock price by valuing a forecasted cash flows that I think they're going to provide and then discounting those cash flows to today's value. I'm about 40% short, but I can get to their stock price if I look at earnings per share, because earnings per share have been really, really good. I'm giving them a PE of 36 because they deserve a 36. So overall, I think the stock price a little expensive, 10% expensive. And I think if somebody wanted to own Nvidia, I can't argue with them at this point. It's been a winner stock, but we'll see. We'll see where investors are at. We've seen some Nvidia sellers, and we'll see if we're going to see some Nvidia hoarders, people that just want to buy more of the stock. So that is my valuation on Nvidia. We will revisit this once they announce their earnings. I'll get to some fresh numbers and I'll adjust this and then share it with you guys again. Nvidia, of course, is part of the semiconductor space, and they went up today, 2.99%. Of course, Broadcom in a way is kind of participating with Nvidia in that data center, and they have flourished as well. Intel's picked up a bid. AMD sold off. Interesting. Some stocks that did sell off today. Microsoft sold off pretty hard. Meta and some red on consumer staples because it was risk on. Utilities, energy sold off. Oil prices were down. Health insurance payers sold off. It was mixed around pharmaceuticals. The aerospace companies that serve power generation into that data center, they did all right, like GE. They have to provide the turbines that are going to go into these data centers. So they did okay today. All right. So as we all know, Nvidia is the most valuable company on the stock market, now at 4.54 trillion. They are being followed by Apple, Microsoft, Apple, Amazon. So those are the big giant companies. And Nvidia is making it happen. Year to date, great performance. So nicely done there. All right. So did you have anything else to share before we hear these earnings over from Nvidia?
Yeah, let's take a look at the chart real quick just so we can look at some support levels. So they closed at 186.52 today. I have this first support level basically at around 180.87. And I also have this second support level if it fails to hold that, which is at this gap support, which would be about 166. And then you heard me say that max pain on the options market that expiring this Friday. That would be about 172. So that almost sits in between these two support levels. They did hit their max closing price on October the 29th, and they basically sold off into the earnings. When I did my video the other day, they were actually in negative territory. On the RSI, it was sitting around 47 or so. They did find support at the RSI level of 40 and are moving back up. So that's somewhat of a positive sign. But the PPO is actually in negative territory, and we had a bearish crossover in bullish territory on the 6th of November. So anyway, that's some of the support levels that I'm watching as we go into earnings.
Very interesting. Very interesting. So, looking at your prospects for this stock here, how do you play Nvidia? I know you've played it quite well. Anything you can give us with regards to your investing strategy with Nvidia?
Well, let me show you how I played it in the past. I basically entered into it in December of 2023, and that was on a long consolidation breakout. So I picked up some shares in December of that year and rode that up. We got into another consolidation period. When it finally broke out above that, I was adding in here. Then it broke out above and it found another consolidation period. And whether I draw this purple shaded box there or pull it all the way back to here, because this was really a consolidation range, and it stayed there through most of 2025 out to July, and it started in June of 2024, so almost a year. You had to be patient, and there was a big sell-off, as we all know, in April. But then once again, it had another breakout. So I love buying these breakouts on companies like this. Nvidia is pulling back down into the same
Plotting
range.
there, Daryl. Nicely done, sir. Nicely done. Keep going.
So anyway, I only own about 80 shares right now. I did have 100 up until last week. I did trim 20% going into the earnings because they were showing a little bit of weakness. I'll know here in not too many more minutes whether that was a good thing or a idiot thing to do.
Well, we'll see. We'll see. Looks like Bo is back. Bo, let's take a look here. Do I think Nvidia is going to be like Cisco? Potentially. And let's take a look at what this question is bringing up. Are you done, Daryl, or did you need
Yes,
a
I am.
minute?
Yes, I
All
am.
right, perfect. So the question stems around, and maybe as I set this up, the question is going to be, NVIDIA's making these deals where they're investing in a company and then that company's buying GPUs and that kind of action, right? And that could be kind of like the ingredients that remind us of Cisco. Cisco being the company that provided the best networking equipment during the .com build out. Now, the .com build out, I'm here to tell you, I'm streaming with Daryl worldwide on the internet. It worked. It was real. It provided real businesses and so forth. But this business, this stock got overheated. It really just launched itself and then it collapsed. Meanwhile, the company continued to grow their revenues year after year, even after this collapse, right? The stock collapsing, geez, like 75, 80% of its value. Even though it was collapsing from a stock price, the company continued to grow their top line revenue, their profits, cash flow, everything. But the market was like, it's just too expensive. It began to sell. Investors got hurt and they didn't want anything to do with the stock. Now, after that, the stock did work. If you if you bought the stock later on, yeah, the stock worked and the business continues to be a very good business. Cisco continues to be the leader of networking. It's now a big, big business. So most definitely that's the case. Now, when we look at NVIDIA, I'm not saying that, history is going to repeat itself, but it does have this kind of chart and we haven't seen the backside of this. Will it go up and kind of continue to rise, gradually? Will it go up and come down and have volatility? It has shown some volatility in the past. So we will see. It could be, Bo, it could be that we see something similar to Cisco. It may rhyme with what's happened to Cisco, but we need a couple of years to go because this is not going to happen overnight. It's going to happen over a period of time. Thanks for asking about that. Have earnings dropped? Have you seen earnings drop?
I've got my alerts set. I haven't seen them yet.
So we've got, this is the roadshow. You're welcome, Bo. Good to see you. You're a regular now. It's great to have you on the streams, man. So this is going to be the webcast that they're going to announce. So
okay, they did release according to Yahoo.
All right, let's get our hands on those earnings. And let me give you the screen because it sounds like you've got something to report. What are you seeing?
Well, I don't actually have them to report. I just saw an alert from Yahoo. Let me see what they have to say here. Yeah, and they don't have it on their main screen yet. Now, I did see it was a beat, at least on earnings, by it looked to be 4 cents.
So the price is rising according to Mike. Good to see you, Mike. So I am not seeing it available on their website just yet, but I'm sure it'll be there any second. It's a beat. Paul reporting a beat. Absolutely smashed the number. Man, just tore it up into little pieces. It's rocking. It's going up.
Okay, so yeah.
So stock analysis may have it. Thank you for that tip. Let's take a look. All right. So
you still are sharing me, by the way.
Do you have numbers in front of you
I
there?
do have numbers in front of me. So they beat on EPS by 4 cents, revenue they beat by 1.91 billion. Data center revenue is up 25%, 66% from a year ago, 25% from last quarter. Gross margins are expected to be 74.8, and it was 72.42% last time. So he is keeping his promise about getting those back into the mid-range of the 70s. So that is really good. Let's see, that they're expected to be. This is still wishful thinking here. I don't actually see the actual margins here. We can pull open their press release. Gross margin was 73.4, so that is good.
Very good.
Yep. So revenue is expected to be 65 billion plus or minus 2% in the next quarter. We already talked about the margins.
Very good. Looks like a very good earnings report.
Yep. Wow, look at all those announcements. Man. Crazy.
All right. I've got their official earnings report. Let me pop that on the screen.
Okay.
And man, we are setting a record for our coach stream. We're at 4,783 people on our stream. Thanks for joining us. We are in the heart of their earnings, Nvidia, that is. So record revenue, they went up 22% sequentially from Q2, up 62% from a year ago. We expected fantastic. We got fantastic. Data center revenue is up higher, and I have a trend graph that shows, of course, it's at data center. The data center is where all the money is being made these days. And it is true that, their margins being in the mid 70s, that's phenomenal, phenomenal gross margins. And as NVIDIA gets larger and they don't have to put as much into their product, you're going to see that number go even higher. So that looks fantastic. Year-over-year growth looks great. Let's keep looking and seeing their outlook. So revenue is expected to be 65 billion plus or minus 2%, 65 billion for the next quarter. I believe they're reporting Q3. So this will be 65 billion in their Q4. They have that funky fiscal year calendar. So I'm going to note that so I can remember to compare it against the previous year Q4 later on. And they are going to expand those margins, potentially hitting 75%. That's very good. Excellent. So data center is killing it, up 25% sequentially from the previous quarter. That's a very incredible rise. Okay, that's like back-to-back growth, and 66% if you compare it to the year last year, same quarter. So very, very good. Okay, we expected great. We got great. Revenue looks good. Net income looks very good for the quarter. Year to date, $77 billion of profit. Earnings per share looks good. They're loading up this balance sheet with cash. They could start buying islands and all kinds of stuff with this money. They could also acquire other businesses. What do you think? Do you think they'd be an acquisitive company?
AMD.
Buy AMD. There you go. They could buy Intel, and that's pretty affordable these days.
They could buy the energy sector and the utility sector.
Exactly. Cash flow. Cash flow is 23.75 from operations in the quarter. And how much did they put back in CapEx? So a little bit, 1.6 billion. So about 22 billion of free cash in the quarter. Very good. That's in line with my forecast. And I think they're going to continue to grow it. If we compare the 23.7 versus last year, they grew free cash flow by about 6 billion, and dividing 6 billion by 17.6, we are roughly at a 36 to 38% growth rate, which is excellent. They're growing cash flow faster than, actually not as fast as revenue, but it's still very, very good. So that looks great. Looks awesome. Good job, Nvidia. Earnings were expected to be great. They came in great. What's the stock doing? What is the stock doing? Is it flourishing? It's plus 2.4. I guess the market's waiting for the CEO to have his conference call, and then we're probably going to see some more price action coming out of that earnings discussion with analysts. I wonder what analysts are going to ask. Now, there is one area that I wanted to weigh in on and get your opinion on. Much of NVIDIA's news stories over the last couple of months have been where NVIDIA will invest in a company and then that company turns around and buys NVIDIA product. That's a little bit of kind of artificial kind of deal making. It's not natural demand where, hey, your product's just in demand and customers are buying it with no strings attached. Your feeling on, does that make you feel a little gun shy about NVIDIA, or is it like, whatever, it's no big deal?
I don't think it's no big deal. I think it's something we should continue to watch. And I have a feeling that at least one analyst is going to be asking questions along those lines during the call, would be my guess. I do think that media stories tend to escalate those kind of issues probably much bigger than they should be. And even if it is something that is occurring, it's probably a couple years out. So it's something that we need to keep a watch on, but I don't think it's something that would cause me to sell out of NVIDIA at any time in the near future. It does look like the price is continuing to climb in the after hours. Victor must have lost his internet. And I don't have control of the console, or I could show you guys some charts while we're waiting for him to get back. Hey, Kevin, good to see you join. Just waiting for Victor to get back on the call. Looks like he may have lost his internet or lost his connection somehow. It does continue to increase in price in the after hours. They're up to 192. At the moment, I have 5-minute bars set, and since the announcement, the last 3 bars has shown some increasing prices. So that's really, really good news. They did have a high of 207.04 on October the 29th. So that'll be their target to see if they can break out above that. So we talked about this a little bit earlier, and these are kind of mute points. We'll have to wait until we get to the market tomorrow. It could react a little bit differently than what's going on in the after hours. It really depends on what Jensen has to say in the conference call and the other executives in the conference call. But before we came into this call today, I had drawn 2 support lines, one at about 176 or so, and then another at 164. This 164 line was based on this gap that occurred on between July 14th close and the 15 open. It had gapped up a couple of dollars. So I have that support line at that point. And then this one was drawn basically at the lows from these 2 days, one on the 23rd of October and one on the 14th of October. So that's the 2 support lines that I was watching as we went into this call. They have been trading below the 50-day moving average. Yesterday, it looks like they closed maybe above it today, 186.52. And the 50 days, 186.37. So they did close back above that 50-day. I also have a 21-day EMA on here, and you can notice that it had curled over and was trailing downward. And they have been trading below that 21-day moving average since about the maybe about the today's the 19th, 18th, 17th. This would have been the 14th. This would have been the 13th. So after the 13th, they started trading below that 21-day moving average. It looks like Victor's back with us.
Yep. Can you hear me okay?
Yep, I can hear you okay.
Sorry for the technical challenges. Good to be back. Well, thanks for covering that. Looks like the stock is heading higher, 3.66. It's kind of, operating around the high 3 price range. And let me see if I want to change my valuation on the stock. Let's take a look at my valuation again. So now I took the trailing 12 months free cash flow on Nvidia, and the trailing 12 months was 72 billion. Let me update this because that note is incorrect. And they did come in with really good free cash flow. I'm expecting they're going to grow that cash flow by 25% going forward. I'm looking forward from this point. I'm not in the rearview mirror thinking, oh, they're going to grow at 100%. Nope. And then years 3 and 4, I think as we look at their forecast 2 years from now, they're supposed to kind of hit a wall on growth, 4%. When that happens, I'm not expecting a whole lot of growth there. So we'll just put a 5% in there just to park a 5% growth. And then long-term growth, 4%. This is assuming they can hold these cash flows, which is another conversation, because if we have a business that builds or that sells into a data center build out for AI, will they be able to hold these revenues for the next 10 years? That's an interesting conversation. Will businesses have to continue to buy GPUs to make the AI infrastructure bigger and bigger and bigger? If we just need to build it once and the demand goes down, is that going to put pressure on Nvidia? That remains to be seen. My forecast is that they're going to be able to hold these cash flows. That may be overly optimistic, but that's my forecast. Even when I do that, I can't get to the stock price that they're trading on, because the present value of all these cash flows, as incredible as they are, is 2.9 trillion. I'm going to add cash, take away debt, and I get to an equity value of about 3 trillion. That's as high as I can get to when I do a net present value of the existing cash forecast for this company. So obviously that's lower than the 4.5 trillion they're trading at. So we can't get there with free cash flows. This is the principal method that a lot of investors use, famous investors, Warren Buffett, even our friends like the top investors that we see out there. They use free cash flows and taking the net present value. Now, earnings per share is a different matter. 33% discount. If you just value Nvidia using future earnings, I'm using a PE ratio of 36. They deserve a 36. And I'm going to grow their profit 15% from this point. And this point being, again, we're looking forward into 2026, 27. So I would call this fairly priced. You can buy into it if you feel like, hey, they're just going to continue to be really important. Investors into Apple, when Apple stopped growing, they did quite all right. For like 5 years, they did better than all right. They did great. So is Nvidia going to get into a mode similar to Apple's, where it becomes such an important company, just continues to drive profit, cash, buys back shares, acquires a couple businesses along the way, makes themselves more valuable? That is what you have in store. That's the next chapter of Nvidia. They've grown really fast. They're going to grow a little bit more. And how can they sustain their value? That's going to be the next chapter. They can do it. They can definitely do it. They could look over at the Apple example and maybe replicate some of the things they did. Your thoughts on how far longer they can keep growing revenues?
Well, let's take a look at FASTgraphs. They still, for 26, so we only basically have one more quarter, but they're expecting 52% growth, 49% the following year, and 24% the next year. So they are continuing to grow their earnings. FASTgraphs calculates their fair value to be 55.02 times. Over this 13-year period that we're looking at, they have grown their operating earnings growth rate at 55.02. And the market normally applies a multiple of 42.24, which is this blue line. So unlike a lot of other companies, they are trading below fair value right now, according to FASTgraphs. So just to give you an idea, if I pull up Palantir here, you can see that they're trading way above their fair value, their normal market multiple. They are trading even above that. So this is a pretty risky bet to be moving into this one unless you feel so strongly about Palantir. But all they have to do is pull back to fair value, and there's a opportunity for a lot of lost money there. So if we go back to Nvidia, I think they're still, let me take my transactions off of there. I mean, they're still in really good shape, even from today. If they continue to trade at their market multiple by the end of next year, we're still looking at a 57.3% total rate of return for the next year.
That would be great.
Yep.
Yep. Incredible. So looking at where the stock's trading as we speak, they're up 3.5. So it looks good. That looks pretty incredible. They have very good earnings. I wonder what time was their earnings call going to be? Let me look that up. And you can continue talking. I'm going to look up what time their actual earnings call is going to be.
Okay, I think Bo had a question for me about how I feel about selling my Nvidia.
Mm-hmm.
So I did have 100 shares going into earnings, and I trimmed them at 183.79 on this date, 7th of November. The reason I did that is I have a very pretty strict process that I follow, and I use chandelier exits to set my stop price, my exit price for me. And this top chandelier, which is a little bit hard to see, it's kind of behind the 20-day moving average at the moment. But as it moves higher and higher, I set this orange line at the high water mark. And then I multiply the average true range by 5 in this case, and that's my next exit level. And here's my final exit level, where if it breaks that, I'm completely out of the stock. But I will trim if it hits this first stop, and it did. So I can't feel necessarily bad or sad that I did that, because this is exactly what I want my process to do. If it was dropping down and looking weak into earnings, then I don't want to hold it, not all of it. So just to show you that this does kind of work, I have traded in and out of Nvidia several times, total of 30 times actually. Of those 30 trades, I have 6 that are open, so I've closed 24. But of those trades, those 30 trades, 24 of them have been winning trades and only 6 losing trades. So in those 6 losing trades, I've lost a total of $658. So basically $100 per trade. And I've made 13,000 on these 24. So if you divide that by that, you get a gain-loss ratio of 5.1 to 1. And that's what I want to do. I want to keep my gains much bigger than my losses. So I tend to trim early, get out if it looks like it's going to get weak, and then I'll find a place to get back in and add to my shares. So all of this gives me a win rate of 80%. So that's why I follow that process, and I don't feel bad for selling the 20 shares.
Nicely done. Good job. All right, perfect. So let me show, there's some of their trends. Nvidia most definitely is a data center infrastructure company. This is where the big growth has happened, just quarter after quarter. Their legacy business is gaming. This is where the whole thing began, whether they wanted to accelerate graphics for gamers that were doing PC games. That business continues to kind of not grow. It's growing, but not by the amounts that the data center is growing. They have an automotive business, but it's tiny compared to data center. So this is where it's at. It's a data center company. If data centers continue to need this high performance computing, Nvidia is going to be the principal company that drives all that growth. It looks like the stock is heading higher. The earnings call will be at 5 p.m. Eastern, and it's going to start in about 15 minutes. So we are to a point where we've valued Nvidia. I think they value fairly, according to my analysis. According to was it FASTgraphs? FASTgraphs does have the stock as being trading under its value. It's a stock that it's what story do you want to form? Big picture, and then you set your course on investing with Nvidia. There is disagreement among analysts. I mean, the disagreement's pretty broad. You have, according to stock analysis, you have one analyst that's at a $350 price target, obviously optimistic about the business, optimistic that it will continue to drive value in the stock. But you have some bears, $100 per share, the low price target. And we'll see where, what happens over the next couple of years. I think it's going to take time because this stock is very, very well desired, and it's going to continue to trade higher. This is the year that we'll see how the market treats it. Again, Apple, they've been growing at less than 4% for a while, and their stock continues to go higher. And that's because they were able to just be more effective in driving down profit to the bottom line. They've bought back just so many shares, so they make the scarcity of shares drive up the stock price. Those things could be kind of the playbook that Nvidia uses to make their stock more valuable. They got so much cash on the balance sheet, they could buy back shares like crazy. So that could be the next lever. That could be a lever that they have in the future. It doesn't have to be the next lever.
What do you think about Michael Burry's concerns about the depreciation schedules?
I understand what he's saying, which is, we have traditionally, you depreciate the hardware, computer hardware, over 4 years. And he's saying, well, now companies are depreciating over 6, so they don't have to take as much of that expense on current income statement, right? On the current income.
Right.
Now, it's not necessarily that the equipment ceases to operate. It's that you have, over the course of 4 years, the innovation cycle is massive, right? Like the GPUs today are way better than GPUs 3 years ago. So it's not a matter of, oh, we got to replace the GPUs because they don't work anymore. It's because we have to take the leap forward or our competition will. And then you would have to, in essence, write off the GPUs that you're no longer using.
Right.
So he does have a good point that if you are depreciating over 6 years, that is overly optimistic because it's not going to be necessarily that the GPU is in service for that term. It's that technology will disrupt itself. It will continue to get faster and faster and faster. And the chips that you bought 4 years ago are not useful anymore because you don't want to spend the electricity on them because they're not performing up to the level of the most recent, state-of-the-art chips.
Right.
So he makes a good point. That's part of the uneasiness of how expensive the market is. I believe that the market is expensive. It's not, I'm not kind of sitting in my bunker thinking, oh, the world's going to come to an end. But I would say that the market has traded higher for 3 years. Great. Everybody's portfolios are higher. Great. But we have an expensive stock market. And when you're seeing activity like the changing of depreciation schedules, it adds to, okay, there could be some fluff there that we're going to have to deal with in the future. So that's my answer to your question.
Okay, thank you very much. I appreciate your insight on that.
Yeah. And along with when we look at, how many deals NVIDIA is doing, they're doing deals with, this company, but then the company is going to turn around and buy GPUs from them. That one there does kind of make me think, okay, you're putting some artificial numbers in play, because of course you're going to buy your GPUs because you just invested the money you did. That's more concerning to me than the depreciation. Both of them are concerning, but I would say that the whole artificial deal making, that one is a concern of mine. All right, so they're going to start their call in about 9 minutes. Looks like we've covered most bases. Anything else that you think we got to cover until we have the CEO talking? And I expect the stock's going to start moving again in about
I expect it to move
20
as well.
minutes. 20 to 30 minutes, we should see some swings in the stock. And in the meantime, looks like we are knocking on the door of 5,000 attendees to our stream. Wow. Help us get to 5,000, everybody. It'd be really good. Hey, we got there. Yes. We're at 5,000. So that's a record for us. Thanks so much for spending part of your day. It's a big day. It's an exciting day to look at NVIDIA. And they came in, they announced earnings. Earnings were incredible. We were expecting incredible. They delivered. Now, how's the market going to process it? It'd be interesting is, let's take a look at what the other peer companies are doing today. Apple, Microsoft, or I should say in after hours, Google, Amazon, Broadcom, Meta. Are they catching a free ride thanks to NVIDIA? Well, Apple, not so much, just up slightly. They had a decent day today, but Apple is not setting any records this year. So Apple's not getting a free ride. How about Microsoft? Microsoft's getting a little bump. Interesting. So it looks like Microsoft had a bad day. They've had a kind of a rough month. Year to date, they're doing okay. I think that's performing right there with the S&P. So Microsoft's catching a little bit of a lift. Google Alphabet catching a nice lift, up 1.5%. They had a very good day. They've had a very good week. Monday it was announced that Berkshire Hathaway is buying shares of Google Alphabet. Tuesday, Gemini 3 is being well received, so that bumped them. Today, it just kind of keeps going, and now NVIDIA rocking is helping Google do well. So the data center stocks, which I include, are the big ones, are Amazon, Microsoft, Google. Looks like Microsoft's up a little bit. Google Alphabet's up. Now, the one that's kind of been a little lagging is Amazon. This one is just barely positive year to date. It's catching a little bit of a bid in after hours. Now, Broadcom, yeah, they're rallying. Broadcom has been doing really, really well this year. They're up 52.87, and it looks like in after hours they're catching a rally. They're going to announce December 11th, so we're about a month away. Yeah, actually about 3.5 weeks away from their earnings. We'll see what they report. I happen to think that Broadcom is a little too expensive, actually a lot too expensive. And the reason for it is I don't think Broadcom possesses the moat, the barrier to keep competitors out that NVIDIA possesses. NVIDIA has an awesome moat. Their GPUs are better than anybody else, period. Nobody can come close. Broadcom has more compute that is could be replicated by some of its competitors. So I happen to think that Broadcom may see a lot more competition from like the Qualcomms and the AMDs and so forth. I think those companies can carve away at Broadcom's market share. But I think NVIDIA's market share is pretty solid. Nobody even comes close to the performance of NVIDIA GPUs. So if they can keep that superior performance, that in itself is their moat. Another problem child is Meta. They've been having a hard time, down 18% over the last month. They're catching a little bid tonight. So NVIDIA up almost 4%, making it happen. The CEO would probably start talking about 7 minutes, 8 minutes. And it'll probably be 25 minutes from now when we see the fireworks. And we'll see what the analysts focus their questions on. You know, what kind of questions are they going to be asking? Will they try to, get good comments on their forecast? You know, how are they going to forecast their business? And they'll ask for specifics on, give me some details that make us have conviction or confidence in your numbers. I think that's where they're going to go, because that's what it's all about with NVIDIA is their forecast. What are they going to do next? Are they going to keep this valuation at 4.53 trillion? Tomorrow, if you bump that by 4%, it's going to go up to 4.6, 4.7 or so. So it's going to go higher. All right. So it looks like we've got a lot of the members in. Good to see everybody. Genetic Smite.
Let me share a spreadsheet on that. Maybe help answer that question.
All right.
So I keep a spreadsheet for all the holdings that I have for every single quarter. And I look at their relative strength going in, the date they're going to report, their estimate, whether it was a beat or a miss, the initial reaction, and I put the implied move in here. The one thing you will notice is that implied move, it is somewhat unusual. It does happen, but it's very unusual for it to move out of that implied move. For UPS, it hit the number exactly. So here we have a 5.9. It traded at 1.23%. Here we had a 12.4% implied move, and it actually moved 12.5%. So these are pretty accurate in helping set our expectations. Before, I used to calculate the implied move. When somebody would ask me, what do you think UPS is going to do after earnings? It was really hard to identify a good price that I could defend. With this implied move, it is much easier to defend now, because it's not like me coming up with the number all by myself, or just me and Victor, or me and two other people. This is hundreds and hundreds and hundreds of people buying options and helping set that price. So it's a big mindset, a collective mindset of people setting their expectations for what they believe a company's going to do at earnings time. So that's why I calculate it, and why I think it's so important, because it really does help. Here's one at 12.1. It actually moved 14.1, but it's pretty rare. Out of these 43 that's reported so far, there's probably only been one or two that exceeded that implied move. So hopefully that helps answer your question. And if you want to know how to calculate it, that's really easy to do as well. Let me just show you real quick how to do that. So for NVIDIA, you just go to the options chain, scroll down to the at the money price in the options chain. So it was trading at 186 at the close. The at the money price was 182. You take this midpoint for the put, you take the midpoint for the call, add them together and divide it by the strike price. And that will give you the implied move. And you do that for the nearest option expiration before or after their earnings. So that's as simple as it is to calculate it.
Easy for you to say, sir. Nicely done. You make it look easy. Thanks for covering that. Anything else on that?
Nope, that's it for me.
All right. So we've got an interesting comment that I wanted to kind of follow as a thread. I think Dre was saying that all data center stocks are up. So he is correct. AMD up 4% in after hours. So they can thank their frenemies over at Nvidia for having an awesome earnings report. Qualcomm up 0.84%. It's not necessarily a big data center company. Intel up 1.54%. So that's certainly catching a bid. TSM up 3%. NVIDIA is going to put more orders for TSM to produce more GPU chips and so forth. So TSM is going to flourish. ASML makes the big machines that produce these semiconductors. They're catching a bid. So yeah. So NVIDIA going higher is helping the whole space. It's moving the whole market, most definitely. And Broadcom is up as well. So it is going to be higher. I expect if they can hold that gain, and I'm sure this call just started right now, the person who's in charge of investor relations is doing his whole preamble, and then the CEO will have his opening remarks. Maybe 10-15 minutes from now, he'll start answering questions. So we'll see if the stock moves in about 10-15 minutes. So yeah, the data center is red hot, and Nvidia is moving the market. Absolutely. So I'm seeing a lot of stocks that you guys want to take a look at. I've made a note of them, and we can do that after we get done with Nvidia. So I've noted XP, Palo Alto, Interactive Brokers, Meta. So we can certainly look at them. I just don't want to leave Nvidia just yet. And a funny comment, I think Shadow Guy is saying that Nvidia could acquire Oklo. Yeah, that would be interesting, right? That would be very interesting. Not in their industry, but I guess related to the data center. So, so here's another comment. So after our prices are spiking for Palantir, yep, 3% looks good. And then there was A-Lab. So that's a smaller cap. And they're picking up a nice bid, 6%. Nice. It's a smaller cap, but it is a semiconductor stock that works alongside NVIDIA in the data center. It's handling the communication between big clouds. So if you have a workload, maybe two big workloads that need to transfer data, Astera Labs has the best technology in that space. They're catching a nice bid in after hours. So that looks really good. So NVIDIA is making everybody go higher. And look at that. Their stock's going up. CEO's talking. He probably has his leather jacket on, and he's got his speech going. Stock's up to 5%. Keep talking. Don't have him stop talking, and the stocks are going to keep rising. Incredible. So once he stops talking, he starts answering, being asked questions and answering. That's when the real moves are going to happen. We'll go a few more minutes and see what happens. So one thing I like about their CEO, I think on his LinkedIn profile page, it shows that his first job, I think he was a bus boy at a Denny's, and he's kept it on his profile. That's pretty cool. I think it shows a little bit of humility. Yeah. Now he's worth, billions, but that's cool. It's good to know that. Smart guy. All right. So we're at up 5.3%. Looks good. Looks real good. Earnings came in as expected, and now the CEO is likely talking. Can you hear that?
No. Did you share only that window?
Let me try to fix it.
Tasks. Companies such as
Can you hear it
Cursor,
now?
Anthropic,
Yes.
Open Evidence, Epic, and Abridge are experiencing a surge in
This is
user
the
growth
CEO talking.
as they supercharge the existing workforce, delivering unquestionable ROI for coders and healthcare professionals. The world's most important enterprise software platforms like ServiceNow, CrowdStrike, and SAP are integrating NVIDIA's accelerated computing and AI stack. Our new partner, Palantir, is supercharging the incredibly popular ontology platform with NVIDIA CUDA-X libraries and AI models for the first time. Previously, like most enterprise software platforms, ontology runs only on CPUs. Lowe's is leveraging the platform to build supply chain agility, reducing costs and improving customer satisfaction. Enterprises broadly are leveraging AI to boost productivity, increase efficiency, and reduce cost. RBC is leveraging agentic AI to drive significant analyst productivity, slashing report generation time from hours to minutes. AI and digital twins are helping Unilever accelerate content creation by 2x and cut costs by 50%. And Salesforce's engineering team has seen at least 30% productivity increase in new code development after adopting Cursor. This past quarter, we announced AI factory and infrastructure projects amounting to an aggregate of 5 million GPUs. This demand spans every market: CSPs, sovereigns, model builders, enterprises, and supercomputing centers, and includes multiple landmark buildouts. xAI's Colossus 2, the world's first gigawatt-scale data center. Lilly's AI factory for drug discovery, the pharmaceutical industry's most powerful data center. And just today, AWS and Humane expanded their partnership, including the deployment of up to 150,000 AI accelerators, including our GB300. xAI and Humane also announced a partnership in which the two will jointly develop a network of world-class GPU data centers anchored by the flagship 500 megawatt facility. Blackwell gained further momentum in Q3 as GB300 crossed over GB200 and contributed roughly 2/3 of the total Blackwell revenue. The transition to GB300 has been seamless, with production shipments to the major cloud service providers, hyperscalers, and GPU clouds, and is already driving their growth. The Hopper platform, in its 13th quarter since inception, recorded approximately $2 billion in revenue in Q3. H20 sales were approximately 50 million. Sizable purchase orders never materialized in the quarter due to geopolitical issues and the increasingly competitive market in China. While we were disappointed in the current state that prevents us from shipping more competitive data center compute products to China, we are committed to continued engagement with the US and China governments, and will continue to advocate for America's ability to compete around the world. To establish a sustainable leadership position in AI computing, America must win the support of every developer and be the platform of choice for every commercial business, including those in China. The Rubin platform is on track to ramp in the second half of 2026. Powered by 7 chips, the Vera Rubin platform will once again deliver an X-factor improvement in performance relative to Blackwell. We have received silicon back from our supply chain partners and are happy to report that NVIDIA teams across the world are executing the bring up beautifully. Rubin is our 3rd generation rack scale system, substantially redefined the manufacturability while remaining compatible with Grace Blackwell. Our supply chain, data center ecosystem, and cloud partners have now mastered the build to installation process of NVIDIA's rack architecture. Our ecosystem will be ready for a fast Rubin ramp. Our annual X-factor performance leap increases performance per dollar while driving down computing costs for our customers. The long useful life of NVIDIA's CUDA GPUs is a significant TCO advantage over accelerators. CUDA's compatibility and our massive installed base extend the life of NVIDIA systems well beyond their original estimated useful life. For more than 2 decades, we have optimized the CUDA ecosystem, improving existing workloads, accelerating new ones, and increasing throughput with every software release. Most accelerators without CUDA and NVIDIA's time-tested and versatile architecture became obsolete within a few years as model technologies evolve. Thanks to CUDA, the A100 GPUs we shipped 6 years ago are still running at full utilization today, powered by vastly improved software stack. We have evolved over the past 25 years from a gaming GPU company to now an AI data center infrastructure company. Our ability to innovate across the CPU, the GPU, networking, and software, and ultimately drive down cost per token is unmatched across the industry. Our networking business, purpose-built for AI, and now the largest in the world, generated revenue of $8.2 billion, up 162% year over year, with NVLink, InfiniBand, and Spectrum-X Ethernet all contributing to growth. We are winning in data center networking as the majority of AI deployments now include our switches with Ethernet GPU attach rates roughly on par with InfiniBand. Meta, Microsoft, Oracle, and xAI are building gigawatt AI factories with Spectrum-X Ethernet switches, and each will run its operating system of choice, highlighting the flexibility and openness of our platform. We recently introduced Spectrum XGS, a scale-across technology that enables gigascale AI factories. NVIDIA is the only company with AI scale-up, scale-out, and scale-across platforms, reinforcing our unique position in the market as the AI infrastructure provider. Customer interest in NVLink Fusion continues to grow. We announced a strategic collaboration with Fujitsu in October, where we will integrate Fujitsu's CPUs and NVIDIA GPUs via NVLink Fusion, connecting our large ecosystems. We also announced a collaboration with Intel to develop multiple generations of custom data center and PC products, connecting NVIDIA and Intel's ecosystems using NVLink. This week at Supercomputing 25, ARM announced that it will be integrating NVLink IP for customers to build CPU SoCs that connect with NVIDIA. Currently on its 5th generation, NVLink is the only proven scale-up technology available on the market today. In the latest MLPerf training results, Blackwell Ultra delivered 5x faster time to train than Hopper. NVIDIA swept every benchmark. Notably, NVIDIA is the only training platform to leverage FP4 while meeting the MLPerf's strict accuracy standards. In semi-analysis inference max benchmark, Blackwell achieved the highest performance and lowest total cost of ownership across every model and use case. Particularly important is Blackwell's NVLink's performance on a mixture of experts, the architecture for the world's most popular reasoning models. On DeepSeek R1, Blackwell delivered 10x higher performance per watt and 10x lower cost per token versus H200, a huge generational leap fueled by our extreme co-design approach. NVIDIA Dynamo, an open source, low latency modular inference framework, has now been adopted by every major cloud service provider. Leveraging Dynamo's enablement and disaggregated inference, the resulting increase in performance of complex AI models such as MOE models, AWS, Google Cloud, Microsoft Azure, and OCI have boosted AI inference performance for enterprise cloud customers. We are working on a strategic partnership with OpenAI, focused on helping them build and deploy at least 10 gigawatts of AI data centers. In addition, we have the opportunity to invest in the company. We serve OpenAI through their cloud partners, Microsoft Azure, OCI, and CoreWeave. We will continue to do so for the foreseeable future. As they continue to scale, we are delighted to support the company to add self-build infrastructure, and we are working toward a definitive agreement and are excited to support OpenAI's growth. Yesterday, we celebrated an announcement with Anthropic. For the first time, Anthropic is adopting NVIDIA, and we are establishing a deep technology partnership to support Anthropic's fast growth. We will collaborate to optimize Anthropic models for CUDA and deliver the best possible performance, efficiency, and TCO. We will also optimize future NVIDIA architectures for Anthropic workloads. Anthropic's compute commitment is initially including up to 1 gigawatt of compute capacity with Grace Blackwell and Vera Rubin systems. Our strategic investments in Anthropic, Mistral, OpenAI, Reflection, Thinking Machines, and other represent partnerships that grow the NVIDIA CUDA AI ecosystem and enable every model to run optimally on NVIDIA's everywhere. We will continue to invest strategically while preserving our disciplined approach to cash flow management. Physical AI is already a multi-billion-dollar business addressing a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. Leading US manufacturers and robotics innovators are leveraging NVIDIA's 3-computer architecture to train on NVIDIA, test on Omniverse computer, and deploy real-world AI on Jetson robotic computers. PTC and Siemens introduced new services that bring Omniverse-powered digital twin workflows to their extensive installed base of customers. Companies including Belden, Caterpillar, Foxconn, Lucid Motors, Toyota, TSMC, and Wistron are building Omniverse digital twin factories to accelerate AI-driven manufacturing and automation. Agility Robotics, Amazon Robotics, Figure, and Skilled at AI are building our platform, tapping offerings such as NVIDIA Cosmos World Foundation models for development, Omniverse for simulation and validation, and Jetson to power next-generation intelligent robots. We remain focused on building resiliency and redundancy in our global supply chain. Last month, in partnership with TSMC, we celebrated the first Blackwell wafer produced on U.S. soil. We will continue to work with Foxconn, Wistron, Amkor, Spill, and others to grow our presence in the U.S. over the next 4 years. Gaming revenue was $4.3 billion, up 30% year on year, driven by strong demand as Blackwell momentum continued. End market sell-through remains robust, and channel inventories are at normal levels heading into the holiday season. Steam recently broke its concurrent user record with 42 million gamers, while thousands of fans packed the GeForce Gamer Festival in South Korea to celebrate 25 years of GeForce. NVIDIA Pro Visualization has evolved into computers for engineers and developers, whether for graphics or for AI. Professional visualization revenue was $760 million, up 56% year over year, was another record. Growth was driven by DGX Spark, the world's smallest AI supercomputer, built on a small configuration of Grace Blackwell. Automotive revenue was $592 million, up 32% year over year, primarily driven by self-driving solutions. We are partnering with Uber to scale the world's largest Level 4 ready autonomous fleet, built on the new NVIDIA Hyperion L4 robotaxi reference architecture. Moving to the rest of the P&L, GAAP gross margins were 73.4%, and non-GAAP gross margins was 73.6%, exceeding our outlook. Gross margins increased sequentially due to our data center mix, improved cycle time, and cost structure. GAAP operating expenses were up 8% sequentially and up 11% on non-GAAP basis. The growth was driven by infrastructure compute, as well as higher compensation and benefits and engineering development costs. Non-GAAP effective tax rate for the third quarter was just over 17%, higher than our guidance of 16.5% due to the strong U.S. revenue. On our balance sheet, inventory grew 32% quarter over quarter, while supply commitments increased 63% sequentially. We are preparing for significant growth ahead and feel good about our ability to execute against our opportunity set. Okay, let me turn to the outlook for the fourth quarter. Total revenue is expected to be $65 billion, plus or minus 2%. At the midpoint, our outlook implies 14% sequential growth, driven by continued momentum in the Blackwell architecture. Consistent with last quarter, we are not assuming any data center compute revenue from China. GAAP and non-GAAP gross margins are expected to be 74.8% and 75%, respectively, plus or minus 50 basis points. Looking ahead to fiscal year 2027, input costs are on the rise, but we are working to hold gross margins in the mid-70s. GAAP and non-GAAP operating expenses are expected to be approximately $6.7 billion and $5 billion, respectively. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $500 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. At this time, let me turn the call over to Jensen for him to say a few words.
Thanks, Colette. There's been a lot of talk about an AI bubble. From our vantage point, we see something very different. As a reminder, NVIDIA is unlike any other accelerator. We excel at every phase of AI, from pre-training and post-training to inference. And with our 2-decade investment in CUDA-X acceleration libraries, we are also exceptional at science and engineering simulations, computer graphics, structured data processing, to classical machine learning. The world is undergoing 3 massive platform shifts at once. The first time since the dawn of Moore's Law. Nvidia is uniquely addressing each of the 3 transformations. The first transition is from CPU general purpose computing to GPU accelerated computing, as Moore's Law slows. The world has a massive investment in non-AI software, from data processing to science and engineering simulations, representing hundreds of billions of dollars in cloud computing spend each year. Many of these applications, which ran once exclusively on CPUs, are now rapidly shifting to CUDA GPUs. Accelerated computing has reached a tipping point. Secondly, AI has also reached a tipping point and is transforming existing applications while enabling entirely new ones. For existing applications, generative AI is replacing classical machine learning in search ranking, recommender systems, ad targeting, click-through prediction, to content moderation, the very foundations of hyperscale infrastructure. Meta's GEM, a foundation model for ad recommendations trained on large-scale GPU clusters, exemplifies this shift. In Q2, Meta reported over a 5% increase in ad conversions on Instagram and 3% gain on Facebook feed, driven by generative AI-based GEM. Transitioning to generative AI represents substantial revenue gains for hyperscalers. Now a new wave is rising. Agentic AI systems, capable of reasoning, planning, and using tools. From coding assistants like Cursor and Claude Code to radiology tools like iDoc, legal assistants like Harvey, and AI chauffeurs like Tesla FSD and Waymo. These systems mark the next frontier of computing. The fastest growing companies in the world today, OpenAI, Anthropic, xAI, Google, Cursor, Lovable, Replit, Cognition AI, OpenEvidence, Abridge, Tesla, are pioneering agentic AI. So there are 3 massive platform shifts. The transition to accelerated computing is foundational and necessary, essential in a post-Moore's Law era. The transition to generative AI is transformational and necessary, supercharging existing applications and business models. And the transition to agentic and physical AI will be revolutionary, giving rise to new applications, companies, products, and services. As you consider infrastructure investments, consider these 3 fundamental dynamics. Each will contribute to infrastructure growth in the coming years. NVIDIA is chosen because our singular architecture enables all 3 transitions, and does so for any form and modality of AI, across all industries, across every phase of AI, across all of the diverse computing needs in a cloud, and also from cloud to enterprise to robots. One architecture. Toshia, back to you.
We will now open the call for questions. Operator, would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to 1 question. Thank you. Your first question comes from Joseph Moore with Morgan Stanley. Your line is open.
Great, thank you. I wonder if you could update us. You talked about the 500 billion of revenue for Blackwell plus Rubin in 25 and 26 at GTC. At that time, you had talked about 150 billion of that already having been shipped. So as the quarter's wrapped up, are those still kind of the general parameters that there's 350 billion in the next kind of, 14 months or so? And, I would assume over that time, you haven't seen all the demand that there is. There's any possibility of upside to those numbers as we move forward?
Yeah, thanks, Joe. I'll start first with a response here on that. Yes, that's correct. We are working into our 500 billion forecast, and we are on track for that as we have finished some of the quarters, and now we have several quarters now in front of us to take us through the end of calendar year 26. The number will grow, and we will achieve, I'm sure, additional needs for compute that will be shippable by fiscal year 26. So we shipped 50 billion this quarter, but we would be not finished if we didn't say that we'll probably be taking more orders. For example, just even today, our announcements with KSA, and that agreement in itself is 400 to 600,000 more GPUs over 3 years. Anthropic is also net new. So there's definitely an opportunity for us to have more on top of the 500 billion that we announced.
The next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There's clearly a great deal of consternation around the magnitude of AI infrastructure build-outs and the ability to fund such plans and the ROI. Yet, at the same time, you're talking about being sold out. Every stood-up GP is taken. The AI world hasn't seen the enormous benefit yet, from B300, never mind Rubin. And Gemini 3 just announced Grok 5 coming soon. And so the question is this: when you look at that as the backdrop, do you see a realistic path for supply to catch up with demand over the next 12 to 18 months, or do you think it can extend beyond that time frame?
Well, as you know, we've done a really good job planning our supply chain. NVIDIA supply chain basically includes every technology company in the world. And TSMC and their packaging and our memory vendors and memory partners and all of our system ODMs have done a really good job planning with us. And we were planning for a big year. We've seen for some time the three transitions that I spoke about just a second ago: accelerated computing from general purpose computing. And it's really important to recognize that AI is not just agentic AI, but generative AI is transforming the way that hyperscalers did the work that they used to do on CPUs. Generative AI made it possible for them to move search and recommender systems and, add recommendations and targeting. All of that has been moved to generative AI, and it's still transitioning. And so whether you installed NVIDIA GPUs for data processing, or you did it for generative AI for your recommender system, or you're building it for agentic chatbots and the type of AIs that most people see when they think about AI, all of those applications are accelerated by NVIDIA. And so when you look at the totality of the spend, it's really important to think about each one of those layers. They're all growing. They're related, but not the same. But the wonderful thing is that they all run on NVIDIA GPUs. Simultaneously, because the quality of the AI models are improving so incredibly, the adoption of it in the different use cases, whether it's in code assistance, which NVIDIA uses fairly exhaustively, and we're not the only one. I mean, the fastest growing application in history, combination of Cursor and Claude Code and OpenAI's Codex and GitHub Copilot. These applications are the fastest growing in history. And it's not just used for software engineers. It's used because of vibe coding, it's used by engineers and marketeers all over companies, supply chain planners all over companies. And so I think that that's just one example, and the list goes on, whether it's OpenEvidence and the work that they do in healthcare, or the work that's being done in digital video editing, Runway, and I mean, the number of really, really exciting startups that are taking advantage of generative AI and agentic AI is growing quite rapidly. And not to mention, we're all using it a lot more. And so all of these exponentials, not to mention, just today I was reading a text from Demis, and he was saying that pre-training and post-training are fully intact, and Gemini 3 takes advantage of the scaling laws and received a huge jump in quality performance, model performance. And so we're seeing all of these exponentials kind of running at the same time. And just always go back to first principles and think about what's happening from each one of the dynamics that I mentioned before. General purpose computing to accelerated computing, generative AI replacing classical machine learning, and of course, agentic AI, which is a brand new category.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. I'm curious, what assumptions are you making on NVIDIA content per gigawatt in that 500 billion number? Because we have heard numbers as low as 25 billion per gigawatt of content to as high as 30 or 40 billion per gigawatt. So I'm curious what power and what dollar per gigawatt assumptions you are making as part of that 500 billion number. And then longer term, Jensen, the 3 to 4 trillion in data center by 2030 was mentioned. How much of that do you think will require vendor financing, and how much of that can be supported by cash flows of your large customers or governments or enterprises? Thank you.
In each generation, from Ampere to Hopper, from Hopper to Blackwell, Blackwell to Rubin, our part of the data center increases, and Hopper generation was probably something along the lines of 20 to 25. Blackwell generation, Grace Blackwell particularly, is probably 30 to 30, say 30 plus or minus, and then Rubin is probably higher than that. And in each one of these generations, the speed up is X factors, and therefore their TCO, the customer TCO, improves by X factors. And the most important thing is, in the end, you still only have 1 gigawatt of power. 1 gigawatt data centers, 1 gigawatt of power, and therefore performance per watt, the efficiency of your architecture, is incredibly important. And the efficiency of your architecture can't be brute forced. There is no brute forcing about it. That 1 gigawatt translates directly, your performance per watt translates directly, absolutely directly to your revenues, which is the reason why choosing the right architecture matters so much now. The world doesn't have an excess of anything to squander. And so we have to be really, really, we use this concept called co-design across our entire stack, across the frameworks and models, across the entire data center, even power and cooling optimized across the entire supply chain in our ecosystem. And so each generation, our economic contribution will be greater, our value delivered will be greater, but the most important thing is our energy efficiency per watt is going to be extraordinary every single generation. With respect to growing into continuing to grow, our customers' financing is up to them. We see the opportunity to grow for quite some time. And remember, today, most of the focus has been on the hyperscalers. And one of the areas that is really misunderstood about the hyperscalers is that the investment on NVIDIA GPUs not only improves their scale, speed, and cost from general purpose computing. That's number one, because Moore's law scaling has really slowed. Moore's law is about driving costs down. It's about deflationary cost, the incredible deflationary cost of computing over time, but that has slowed. Therefore, a new approach is necessary for them to keep driving the cost down. Going to NVIDIA GPU computing is really the best way to do so. The second is revenue boosting in their current business models. You know, recommender systems drive the world's hyperscalers. Every single, whether it's, you know, watching short form videos or recommending books or recommending the next item in your basket to recommending ads to recommending news it's all about recommenders. The internet has trillions of pieces of content. How could they possibly figure out what to put in front of you in your little tiny screen unless they have really sophisticated recommender systems to do so? Well, that has gone generative AI. So the first two things that I just said, hundreds of billions of dollars of CapEx is going to have to be invested, is fully cash flow funded. What is above it, therefore, is agentic AI. This is revenue, is net new consumption, but it's also net new applications. And some of the applications I mentioned before, but these new applications are also the fastest growing applications in history. Okay, so I think that you're going to see that once people start to appreciate what is actually happening under the water, if you will, from the simplistic view of what's happening to CapEx investment, recognizing there's these three dynamics. And then lastly, remember we were just talking about the American CSPs. Each country will fund their own infrastructure, and you have multiple countries. You have multiple industries. Most of the world's industries haven't really engaged agentic AI yet, and they're about to. You know, all the names of companies that we're working with, you know, whether it's autonomous vehicle companies or digital twins for physical AI for factories, and the number of factories and warehouses being built around the world. Just the number of digital biology startups that are being funded so that we could accelerate drug discovery. All of those different industries are now getting engaged, and they're going to do their own fundraising. And so don't just look at the hyperscalers as a way to build out for the future. You got to look at the world. You got to look at all the different industries, and you know, enterprise computing is going to fund their own industry.
The next question comes from Ben Reitzes with Melius. Your line is open.
Hey, thanks a lot. Jensen, I wanted to ask you about cash. You know, speaking of $500 billion, you may generate about $500 billion in free cash flow over the next couple of years. What are your plans for that cash? How much goes to buyback versus investing in the ecosystem? And how do you look at investing in the ecosystem? I think there's just a lot of confusion out there about how these deals work and your criteria for doing those, like the Anthropic, the OpenAIs, et cetera. Thanks a lot.
Yeah, appreciate the question. Of course, using cash to fund our growth. No company has ever grown at the scale that we're talking about and have the connection and the depth and the breadth of supply chain that NVIDIA has. The reason why our entire customer base can rely on us is because we've secured a really resilient supply chain, and we have the balance sheet to support them. When we make purchases, our suppliers can take it to the bank. When we make forecasts and we plan with them, they take us seriously because of our balance sheet. We're not making up the offtake. We know what our offtake is, and because they've been planning with us for so many years, our reputation and our credibility is incredible. And so it takes really strong balance sheet to do that, to support the level of growth and the rate of growth and the magnitude associated with that. So that's number one. The second thing, of course, we're going to continue to do stock buybacks. We're going to continue to do that. But with respect to the investments, this is really, really important work that we do. All of the investments that we've done so far, well, all the way, period, is associated with expanding the reach of CUDA, expanding the ecosystem. If you look at the work that the investments that we did with OpenAI, it's, of course, that relationship we've had since 2016. I delivered the first AI supercomputer ever made to OpenAI. And so we've had a close and wonderful relationship with OpenAI since then. And everything that OpenAI does runs on NVIDIA today. So all the clouds that they deploy in, whether it's training and inference, runs NVIDIA, and we love working with them. The partnership that we have with them is one so that we could work even deeper from a technical perspective, so that we could support their accelerated growth. This is a company that's growing incredibly fast, and don't just look at what is said in the press. Look at all the ecosystem partners and all the developers that are connected to OpenAI, and they're all driving consumption of it. And the quality of the AI that's being produced, huge step up since a year ago. And so the quality of response is extraordinary. So we invest in OpenAI for a deep partnership in co-development to expand our ecosystem and to support their growth. And of course, rather than giving up a share of our company, we get a share of their company. And we invested in them in one of the most consequential once-in-a-generation company that we have a share of. And so I fully expect that investment to translate to extraordinary returns. Now, in the case of Anthropic, this is the first time that Anthropic will be on NVIDIA's architecture. The first time Anthropic will be on NVIDIA's architecture. It is the second most successful AI in the world in terms of total number of users. But in enterprise, they're doing incredibly well. Claude Code is doing incredibly well. Claude is doing incredibly well all over the world's enterprise. And now we have the opportunity to have a deep partnership with them and bringing Claude onto the NVIDIA platform. And so what do we have now? NVIDIA's architecture, taking a step back, NVIDIA's architecture, NVIDIA's platform is the singular platform in the world that runs every AI model. We run OpenAI, we run Anthropic, we run xAI. Because of our deep partnership with Elon and xAI, we were able to bring that opportunity to Saudi Arabia, to the KSA, so that Humane could also be a hosting opportunity for xAI. We run xAI, we run Gemini, we run thinking machines. Let's see, what else do we run? We run them all. And so not to mention, we run the science models, the biology models, DNA models, gene models, chemical models, and all the different fields around the world. It's not just cognitive AI that the world uses. AI is impacting every single industry. And so we have the ability, through the ecosystem investments that we make, to deeply partner on a technical basis with some of the best companies, most brilliant companies in the world. We're expanding the reach of our ecosystem, and we're getting a share and investment in what will be a very successful company, oftentimes once in a generation company. And so that's our investment thesis.
The next question comes from Jim Schneider with Goldman Sachs. Your line is open.
Good afternoon. Thanks for taking my question. In the past, you've talked about roughly 40% of your shipments tied to AI inference. I'm wondering, as you look forward into next year, where do you expect that percentage could go in say, a year's time? And can we maybe address the Rubin CPX product you expect to introduce next year and contextualize that? How big of the overall TAM you expect that can take, and maybe talk about some of the target customer applications for that specific product? Thank you.
CPX is designed for long context type of workload generation. And so long context, basically, before you start generating answers, you have to read a lot, basically, long context. And it could be a bunch of PDFs, it could be watching a bunch of videos, studying 3D images, so on and so forth. You have to absorb the context. And so CPX is designed for long context type of workloads. And its perf per dollar is excellent. Its perf per watt is excellent. And which made me forget the first part of the question.
Inferencing.
Oh, inference. Yeah, there are three scaling laws that are scaling at the same time. The first scaling law, called pre-training, continues to be very effective. And the second is post-training. Post-training basically has found incredible algorithms for improving an AI's ability to break a problem down and solve a problem step by step. And post-training is scaling exponentially. Basically, the more compute you apply to a model, the smarter it is, the more intelligent it is. And then the third is inference. Inference, because of chain of thought, because of reasoning capabilities, AIs are essentially reading, thinking before it answers. And the amount of computation necessary as a result of those three things has gone completely exponential. I think that it's hard to know exactly what the percentage will be at any given point in time and who, but of course our hope is that inference is a very large part of the market, because if inference is large, then what it suggests is that people are using it in more applications and they're using it more frequently. And that's, we should all hope for inference to be very large. And this is where Grace Blackwell is just an order of magnitude better, more advanced than anything in the world. The second best platform is H200. And it's very clear now that GB200, GB300, because of NVLink 72, the scale-up network that we have, achieved, and you saw, and Colette talked about in the semi-analysis benchmark, it's the largest single inference benchmark ever done. And GB200, NVLink 72, is 10 to 15 times higher performance. And so that's a big step up. It's going to take a long time before somebody is able to take that on. And our leadership there is surely multi-year. Yeah. And so I'm hoping that inference becomes a very big deal. Our leadership in inference is extraordinary.
The next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, many of your customers are pursuing behind the meter power, but what's the single biggest bottleneck that worries you that could constrain your growth? Is it power, or maybe it's financing, or maybe it's something else like memory or even foundry? Thanks a lot.
Well, these are all issues and they're all constraints. And the reason for that, when you're growing at the rate that we are and the scale that we are, how could anything be easy? What NVIDIA is doing obviously has never been done before. And we've created a whole new industry. On the one hand, we are transitioning computing from general purpose and classical or traditional computing to accelerated computing and AI. That's on the one hand. On the other hand, we created a whole new industry called AI factories. The idea that in order for software to run, you need these factories to generate every single token instead of retrieving information that was pre-created. And so I think this whole transition requires extraordinary scale. And all the way from the supply chain, of course, the supply chain we have much better visibility and control over, because obviously we're incredibly good at managing our supply chain. We have great partners that we've worked with for 33 years. And so the supply chain part of it, we're quite confident. Now, looking down our supply chain, we've now established partnerships with so many players in land and power and shell, and of course financing. These things, none of these things are easy, but they're all tractable and they're all solvable things. And the most important thing that we have to do is do a good job planning. We plan up the supply chain, down the supply chain. We've established a whole lot of partners, and so we have a lot of routes to market. And very importantly, our architecture has to deliver the best value to the customers that we have. And so at this point, I'm very confident that NVIDIA's architecture is the best performance per TCO. It is the best performance per watt, and therefore for any amount of energy that is delivered, our architecture will drive the most revenues. And I think the increasing rate of our success, I think that we're more successful this year at this point than we were last year at this point. You know, the number of customers coming to us and the number of platforms coming to us after they've explored others is increasing, not decreasing. And so I think I think all of that is just, you know, all the things that I've been telling you over the years are really coming true and or becoming evident.
The next question comes from Stacy Raskin with Bernstein Research. Your line is open.
Questions. Colette, I had some questions on margins. You said for next year you're working to hold them in the mid-70s. So I guess, first of all, what are the biggest cost increases? Is it just memory or is it something else? What are you doing to work toward that? Is it, how much is like, you know, cost optimizations versus pre-buys versus pricing? And then also, how should we think about OpEx growth next year, given the revenues seem likely to grow materially from where we're running right now?
Thanks, Stacey. Let me see if I can start with remembering where we were with the current fiscal year that we're in. Remember, earlier this year, we indicated that through cost improvements and mix that we would exit the year in our gross margins in the mid-70s. We've achieved that and getting ready to also execute that in Q4. So now it's time for us to communicate where are we working right now in terms of next year. Next year, there are input prices that are well known in the industries that we need to work through. And our systems are by no means very easy to work with. There are a tremendous amount of components, many different parts of it as we think about that. So we're taking all of that into account, but we do believe if we look at working again on cost improvements, cycle time, and mix, that we will work to try and hold at our gross margins in the mid-70s. So that's our overall plan for gross margin. Your second question is around OpEx. And right now, our goal in terms of OpEx is to really make sure that we are innovating with our engineering teams, with all of our business teams, to create more and more systems for this market. As you know, right now we have a new architecture coming out, and that means they are quite busy in order to meet that goal. And so we're going to continue to see our investments on innovating more and more, both our software, both our systems, and our hardware to do so. I'll turn it to Jensen if he wants to add in a couple more comments.
Yeah, I think that's spot on. I think the only thing that I would add is remember that we plan, we forecast, we plan, and we negotiate with our supply chain well in advance. Our supply chain have known for quite a long time our requirements, and they've known for quite a long time our demand, and we've been working with them and negotiating with them for quite a long time. And so I think the recent surge, obviously quite significant, but remember our supply chain has been working with us for a very long time, and so in many cases we've secured a lot of supply for ourselves because obviously they're working with the largest company in the world in doing so, and we've also been working closely with them on the financial aspects of it and securing forecasts and plans and so on and so forth. So I think all of that has worked out well for us.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. Jensen, the question's for you. As you think about the Anthropic deal that was announced and just the overall breadth of your customers, I'm curious if your thoughts around the role that AI ASICs or dedicated XPUs play in these architecture build-outs has changed at all. Have you seen, I think you've been fairly adamant in the past that some of these programs never really see deployments, but I'm curious if we're at a point where maybe that's even changed more in favor of just GPU architecture. Thank you.
Yeah, thank you very much, and I really appreciate the question. So first of all, you're not competing against teams. You're against a company. You're competing against teams, and there just aren't that many teams in the world who are extraordinary at building these incredibly complicated things. Back in the Hopper day, in the Ampere days, we would build one GPU. That's the definition of an accelerated AI system. But today, we've got to build entire racks, three different types of switches: a scale up, a scale out, and a scale across switch. And it takes a lot more than one chip to build a compute node anymore. Everything about that computing system, because AI needs to have memory, AI didn't used to have memory at all. Now it has to remember things. The amount of memory and context it has is gigantic. The memory architecture implication is incredible. The diversity of models, from mixture of experts to dense models to diffusion models to autoregressive, not to mention, biological models that obeys the laws of physics. The list of different types of models have exploded in the last several years. And so the challenge is the complexity of the problem is much higher. The diversity of AI models is incredibly large. And so this is where, if I will say, the 5 things that makes us special, if you will. The first thing I would say that makes us special is that we accelerate every phase of that transition. That's the first phase. That CUDA allows us to have CUDA X for transitioning from general purpose to accelerated computing. We're incredibly good at generative AI. We're incredibly good at agentic AI. So every single phase of that, every single layer of that transition, we are excellent at. You can invest in one architecture, use it across the board. You can use one architecture and not worry about the changes in the workload across those 3 phases. That's number 1. Number 2, we're excellent at every phase of AI. Everybody's always known that we're incredibly good at pre-training. We're obviously very good at post-training. And we're incredibly good, as it turns out, at inference, because inference is really, really hard. How could thinking be easy? People think that inference is one shot and therefore it's easy. Anybody could approach the market that way. But it turns out to be the hardest of all, because thinking, as it turns out, is quite hard. We're great at every phase of AI, the second thing. The third thing is we're now the only architecture in the world that runs every AI model. Every frontier AI model. We run open source AI models incredibly well. We run science models, biology models, robotics models. We run every single model. We're the only architecture in the world that can claim that. It doesn't matter whether you're autoregressive or diffusion based. We run everything. And we run it for every major platform, as I just mentioned. So we run every model. And then the fourth thing I would say is that we're in every cloud. The reason why developers love us is because we're literally everywhere. We're in every cloud. We're in every, we could even make you a little tiny cloud called DGX Spark. And so we're in every computer. We're everywhere, from cloud to on-prem to robotic systems, edge devices, PCs, you name it. One architecture, things just work. It's incredible. And then the last thing, and this is probably the most important thing, the fifth thing, is if you are a cloud service provider, if you're a new company like Humane, if you're a new company like CoreWeave or Nscale, Nebius, or OCI for that matter, the reason why NVIDIA is the best platform for you is because our offtake is so diverse. We can help you with offtake. It's not about just putting a random ASIC into a data center. Where's the offtake coming from? Where's the diversity coming from? Where's the resilience coming from? The versatility of the architecture coming from, the diversity of capability coming from. NVIDIA has such incredibly good offtake because our ecosystem is so large. So these 5 things, every phase of acceleration and transition, every phase of AI, every model, every cloud to on-prem, and of course, finally, it all leads to offtake.
Thank you. I will now turn the call to Toshiya Hari for closing remarks.
In closing, please note we will be at the UBS Global Technology and AI Conference on December 2nd, and our earnings call to discuss the results of our 4th quarter of fiscal 2026 is scheduled for February 25th. Thank you for joining us today. Operator, please go ahead and close the call.
Thank you. This concludes today's conference call. You may now disconnect.
All right. So We heard it from the horse's mouth, and the stock has held its stock price quite well. It's been trading up 4%. I, I I think the earnings were good. I didn't hear any tough questions. I would say that I think there was one question on financing, and it didn't really spur any concern there. Um, and we continue to move on. One more quarter of Nvidia growing, and the world at least building out more data centers, consuming more power. It was interesting to see the comments on the chat of how much power is going up in price in the United States and in Ohio. In California, at least we were told our prices were going up 13%. Luckily, we bought solar 3 years ago, so most of our power is provided by the solar panels. So we're good. But I did get an EV back in September, so I might be buying some of that more expensive power. I'm still left with, there's a little bit of disbelief in the whole AI space until it really does show itself up with consumers really adopting it and using it and in real life scenarios. I know we have some scenarios that I think the market, or I would say Nvidia and others, are trying to convince us are working. Like Salesforce.com has been talking about their agentic AI for 10 years. More recently, they renamed it. They have famous actors on commercials trying to get people to believe, hey, we have a business here. And so far there's not a lot of believers. And other things, like I think on Microsoft, they rolled out Copilot. I don't know if that's been hugely successful. So we'll see when it really becomes something that we are seeing in our daily lives and it really drives value. The whole concept of a robot, and I'd love to get your comments on it. I don't think I'm going to be getting a robot for our home anytime soon. It's kind of like, what would I use it for? And at work, at least my work, I don't see where we're going to be getting robots anytime soon. I get that factories that have hazardous jobs should have robots, but that's been around for 40 years. It's not something new. Your comments, Daryl?
Yeah, I don't know. I think robotics are kind of be a big deal, and we might see them before my life ends. I think as far as the overall AI, I think when we're really going to start seeing some big shifts, and it won't be at the consumer level, but it's going to be in the medical discovery. It probably will be in like the legal area and can probably reduce some costs there. As soon as they get these large language models that are specifically tuned to specific industries, that's when I think we're going to start seeing some big breakthroughs.
Yeah, I think the legal use case, I doubled down on that with you, but on the drug discovery and healthcare, I'm very cautious there because we have an FDA that has, I don't know, 80 to 100 years of successful, oversight over how you create drugs, how they affect people. You do animal testing. You have all these safeguards for a reason because you can theorize and say, hey, this drug is going to help people. And then you put it in, an animal and it kills the animal. And you're like, whoa, what happened? It's like, yeah, surprised you. Thank God you didn't put it into a human. Now, I'm not going to be at the front of the line when they say, hey, we got this new drug that was completely created in the AI universe. I'll be like, I'll let a few people ahead of the line. And then a couple months later, ask them, hey, how did it go? And if they're like, yeah, everything was fine, then maybe I'll get a little more confidence. All kidding aside, when I hear comments like that, I get that, it should free up some of the research. Maybe some of the research is very content intensive, so it should help. Got that. but I'm not in agreement that we're going to revolutionize the drug discovery process. It's still going to be human beings making those key decisions, the art of making pharmaceuticals. You still have these talented scientists that are going to be creating, the next drug that's going to, they're doing great things with cancers. I own a couple stocks of companies that are doing fantastic jobs. That's not going away soon. Maybe in 20 years, yeah, but I don't invest to have, a positive outcome in 20 years. I've got my eye on companies, and I want to see results, positive results over the next 12 months. And I want to see my businesses that I own, constructing businesses are going to be worth a lot more. I'm not an Oklo investor. I think they have a big idea. It may work in 3 years, but it's just too risky for me to put money in and then find out, hey, you're a big winner 3 years from now, or hey, you're a big loser in 3 years. No, thanks. I'll leave that up to somebody else. All right. So anything else, sir? Stock price is rising. Looks like they made it through their earnings call. I didn't hear any tough questions, so there wasn't any critical point on the call. Nothing was said that made, people concerned, like, oh no, there's a concern in the AI build out. Looks like Kevin's got a comment. So you're all mandated to use AI. Look at that. Fourth largest bank. All right. Well, hopefully it's helpful in doing your job. Where I work, we do have AI available to us. It's at times useful. Most of the time it's a couple of minutes that were wasted because I ask a question. I'm like, that's not what I needed. So then I go do it the way that I was going to do it to begin with. But I could see it getting better and better. I hope it does. And thanks for sharing that. That's a real life example. Businesses saying, hey, use AI because we want to see efficiency gains. Totally get it. All right. So we got 5,327 people on our stream. It's most definitely the best stream we've had to this point. Nvidia is a big name and very interesting. Anything else we want to go further on with Nvidia, Daryl?
I don't think I have anything else, Victor. I think I've pretty much covered everything that I had noted.
Okay.
Coming into the call.
So I don't have anything else to add, but there were a couple stocks that people brought up. If you wouldn't mind, I don't know if you have a time crunch.
Yeah, go ahead.
Maybe we can go another 10, 15 minutes just to cover a couple of stocks that people brought up. And the first one being is Palo Alto. Did they announce today? Yeah, they announced they're selling off. Looks like Palo Alto, of course, is cybersecurity. And we had a big outage, Cloudflare. Were you affected by that yesterday?
Yes, I was.
Oh, man. Stock Analysis, the website, that's
exactly.
A Cloudflare customer.
Yep, exactly.
So what happened over at Palo Alto that's causing the stock to sell off? Well, revenue was good. Well, this may not be the most current. It doesn't look like it's the most current. So I'm going to have to go to. So they're going to buy a company. Earnings fail to wow. So they top expectations, but the stock slipped. Isn't that interesting? So our friends at Nvidia topped expectations, look great. Their stock rose. These guys, according to the headline, they also did well. Earnings were 93 cents versus 89 that were expected. Revenue topped. Not sure why they would be selling off. I would think they should be going up. I'm not a Palo Alto stock investor. I own Fortinet, and that's the one that I'm decided to buy. Now, the revenue has been, from a percentage standpoint, it's looking like the percentage has been coming down. I'm not seeing the most recent quarter, but their revenue has been good. And this stock for a while was really going up in price, and it has a really nice stock chart. So I'm a little unsure why the stock would be selling off. The news is good. Do you have any charts on Palo Alto?
Yep. So some of the warning signs here is you see a high here on the 19th of September. It pulled back. It ran up to a new high to 217. Pulled back, ran up to a new high. And one of the concerns is on this February 19th peak, you hit an RSI of about 77. You pulled back, and on the next high, you had an RSI that was lower than this peak. You pulled back, ran up to a new high, and the momentum is even lower than this one. So what you end up with is a negative divergence where you have prices going up and momentum going down. That's usually a warning sign, and it finally came into play here on the 12th and has been down every single day except one since that date. I do see a support level here that's already been broken. Even the 20-day moving average is breaking down below that level. So we would have to come down to about right here, might be the next support level, which also happens to course. And what I'm doing is I'm putting my cursors and I'm trying to hit as many points where it saw some support at that level. And that's about right there. I could put an auto resistance line so it'll stay there while I'm moving around. So, but it ends up being about right there. So you can see that it came up and tested it as resistance. It was resistance here, came down and got some little bit of support there, broke above it. This is my next level of support, which also happens to correspond right to about the 200-day moving average. The accumulation distribution has been in distribution since this peak, and the money flow is getting ready to move into negative territory. So it looks like they have some weakness ahead of them. I am looking for about 192, 193 would be their support level.
Interesting. And when I look at the valuation for Palo Alto, I've got a discounted stock on my hands. It's based on the free cash flows that they're going to generate in the future, discounting those cash flows to the net present value of today, and then looking at the earnings per share, doing the same thing. I've got a 9% discount available. Now, that's not a giant discount, so it's close to fair value. And the momentum is maybe showing that, hey, Palo Alto may be discounted even further over the next couple of weeks. And maybe the entry price for Palo Alto is going to be really good if you give this stock time to drop. So that is Palo Alto. Surprising that it's down so much. Now, another stock that people were asking about was Meta. And Meta has been picking up a nice bid in after hours. It's up 1.27. Ever since they announced their earnings and said, hey, we're spending a lot of money on the data center. We're going to spend $75 billion. And the Meta earnings call, there were more concerning questions. With Nvidia, I didn't hear any tough questions. The closest one was the whole financing part of a question, where in Meta, it just seemed like the knives were out. People were like, no, we're not going to let you off the hook. CapEx, 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 and CapEx. And so if a company that's spending at the level that Meta's spending on AI just got hammered, stock went from 751 to 590. So that's a pretty good haircut. The value of the stock's gone down about 17%. That's part of the puzzle that isn't quite filled in a whole lot is, okay, Meta's, I'm going to put in the early adopter or early investor of AI, really trying to pour into their AI business. And they don't have a lot to show for it. So they're getting hammered. But tonight they're rising 1.3%. Now the core business of Meta, which is interesting, is it's flourishing. What was lost in that earnings was, look at this growth rate. It's accelerating. Their core business is accelerating. And just kind of a side note, I was in a Best Buy. I was there to get some other product, but at the very front of the store, they had a big fancy display of the Meta AI glasses. And this thing was pretty big. It was like, I don't know, 100 square feet, maybe 80 square feet within the store, right at the front. So I asked the person there, he had a line in front of him. So I tried to be brief. Have these glasses been successful? He's like, oh, and then some. We're completely sold out. You need to go on a wait list. These are $800 a piece. And it allows you to use these glasses, kind of in a pretty sophisticated way. For example, somebody could be speaking to you and then you have a screen on one of your lenses that's basically interpreting what the person's saying. I was impressed with that. So Meta has a lot of good things going on, but the market has really sold off the stock due to CapEx. So if that type of punishment is going to be applied to businesses that spend on CapEx without showing, promise, I think it's interesting to show that there's two sides to this market. The market loves the companies that are selling into the data center and making lots of money, but the market is abusing the companies that are trying to use the AI paradigm to improve their businesses and so forth. Now, this stock is rising in after hours. I think the earnings, what's lost is the great growth, great gross margins. I think Meta's nicely discounted. I bought more shares. I've been buying more shares. I own a lot of shares of Meta, and second biggest position. Now number one is Google Alphabet because that stock's risen. And this one here has become a nice opportunity. Meta stock, in my opinion, is nicely discounted now. The momentum is down. I'd love to hear your thoughts on Meta. I think your segment's going to be interesting to watch. I think Meta's discounted by 33% because they just drive so much profit and cash flow and they're growing. All these things are good. But what was lost in the wash was all that good news because the analysts really attacked Meta around CapEx in their earnings call. Can you show us the charts on Meta? And what are you seeing? What are you expecting out of this stock?
So I annotated this chart probably 2 or 3 weeks ago. So we had this upper auto support resistance line, which was tested, was a high here. So that became a point of resistance at that point. It was tested in July of this year. They rose above that. They came down and tested that line several times. The end of August, beginning of September, rose up, dropped down below it. So then it became a resistance line once more. And they did break above it for 3 days and then the news. And then 2 weeks ago, I put these two lines there. And so we were probably on this date, right where my mouse is, if you can see that. That's when I drew that line where I thought it would be, and that's based on support and resistance from many points in the past. And you can see that it's drifted down to that almost to the dollar. So that'll be a little bit of support. If it fails to find support there, then my next level of support will be around 525, 526. Because of this big sell-off, the 200-day has already started to roll over. So the momentum is to the downside. The 50-day rolled over probably beginning of October. So that started giving us a warning signal about the beginning of October. The 20-day moving average, 21-day EMA is downward, crossed below the 200 at this point. And then one other concerning thing that I saw here is you have these peaks in price. Notice those peaks in price.
Mhm.
We got to an RSI that was almost oversold. It came down and touched the 40, but it failed to rise back above the 60 level on the RSI. So it rose to 60, failed to go up to at least the same level as prior. So that did not really support this peak price here. Then it started pulling back and it did not get support at the 40 RSI. Notice the previous two times it had support at the 40 RSI. This time it failed. So it broke and almost went into oversold territory. Did finally break out above it and once again failed to get above 60. So these were two warning signals here. Then when it finally happened, we are in really oversold territory at the moment, but it's been that way since the end of October. So I don't know how hopeful I am that it maintains this support here. I don't see anything trying to curl over. Not even the 5-day moving average is curling yet. So I would not be surprised to see this next level of support come into play.
Wow. And it's going to test the lows that it made in April.
Yep.
Jeez. Yeah, I think it's an interesting stock because of how the market's treating it. And I've seen the market treat other stocks similarly. They had really good earnings. Palo Alto. We just looked at Palo Alto. It's like, whoa, that looks pretty darn good. Why isn't the market buying into that success? Right? They grew their revenue. They're profitable. So this market's a little bit finicky. Sometimes it loves something and it hates something that's similar. So
I can tell you, I'm also looking at Meta right now. It doesn't really fit into my investment scenario, but I know it's undervalued at the moment. So what I'm looking for to actually enter this is I'm waiting. This 5-day moving average is still pointing downward. It hadn't even tried to level out yet. So what I would do for me personally is I'm going to wait for that to curve over a little bit. And then I'm going to set a very tight stop on it. If when I buy in, I'm going to set a very tight stop because I don't want it to break down back down through here. So that's what I'm waiting for. I'm waiting for that 5-day to start turning over a little bit.
excellent. Thank you, Daryl. All right, let's check on two more stocks and then we're done. I know we're working a little late, a little overtime, double pay for overtime. Interactive Brokers has been having a good run. And looking at their year to date, this has been a good stock. The brokerage stocks, Robinhood, Interactive Brokers, Charles Schwab, they've been doing really well. This one here, Interactive Brokers, look at that, 46%. Looking at the 5-year, who doesn't like this stock? Looks great. And they've been having a good run. Now, this stock, it has very good performance, good fundamentals, very good growth on top line. We look at their top line growth, it looks good. Of course, it looks good. We have over the last 3 years, retail investors have been making a lot of money on stocks. You've been making money. I've been making money. We use stuff like Interactive Brokers quite a bit. And these guys, their forecast is 7 analysts cover them. They're fairly priced according to analysts. And they're going to keep growing. They've already gotten themselves to a good size. They're going to expand their profits and get their PE into the mid 20s. So that looks good. I think that Interactive Brokers, but you get to pick within that space. You have, you can pick between Robinhood, Charles Schwab, Interactive Brokers. There's some good choices there. So this one here, I happen to think is discounted by 34%. I don't own shares because I own Robinhood. So Robinhood's been an absolute killer this year, just absolutely on a tear. And I'm going to stick with Robinhood. I also own Futu in Asia, and I started buying into eToro. And eToro is a new IPO, but I think they have terrific fundamentals. But I know other investors in this community have made money on Interactive Brokers. So congratulations on that. What are the charts looking like for Interactive Brokers?
Okay, so here, okay, the 5-day hasn't started turning over, but the prices have already started to increase. So we have 1 day today where the prices started to increase. So the support that I would look at, and I don't own this stock. I don't know anything about the past history on them. But if you just go back to this low here from the 5th of September, I looked for some auto support resistance across several points on the price action and didn't really find it. But I would look for this one as long as it stays above this dotted line here, which is about 60.79, as long as it doesn't break down below that. Because you do have a 21-day that's turning south, and you have the 5-day that's decreasing and hasn't started rolling over yet. But if you can get a day tomorrow and the next day above this 5-day, then that'll start turning over and probably won't touch this. And then that would become my stop loss for that particular purchase. It is looks like it's going to stay above the 200 days, so that's good news. Some stocks have not done that recently.
Thank you, sir. And the last one of the evening is XP, which is a small financial products and services company in Brazil. And this company does credit cards, loans, all kinds of services for people in Brazil. This is a small cap in Brazil, so it's risky. And it's really been a loser for some investors that have been there for a while. It has shown some periods of really high appreciation, and the fundamentals look really good. It's a $9.46 billion market cap company, and revenue $3.23 billion. P ratio is really low, and it pays a small dividend. Looking at its revenue growth, this is what is underwhelming. I own New Holdings. I just started buying New Holdings again. I owned New Holdings for a while. I sold it, and now I'm back into New Holdings. New Holdings earnings were really good. This is what concerns me about XP. Why aren't you growing faster? You're not really big. And the growth on the quarterly also is a little concerning, single digit. That concerns me. New Holdings is growing far faster than that, and I have confidence that their business has momentum. XP has 5 analysts covering it. They all believe it should be priced higher, and their performance is supposed to continue to do well. They have good growth expected next year and the year after. So that looks good. And their PE ratio is going to fall into single digits. Again, I'm in New Holdings. I'm more comfortable with New Holdings. It's in the same country. And New Holdings is also in other countries, as I'm sure XP is as well. This is lesser known. And that's a part of my concern is sometimes these small caps that not a lot of investors know about, they just don't perform all that great. So let me see if I can find XP's valuation. I'd had it here a minute ago. There we go. And this is wildly discounted, but it's because it's not a highly recognized name. It's a hard stock to establish momentum on. Looks like Howard Marks, a famous investor, bought into XP and New Holdings. That's interesting. Maybe he's going to move the stock a bit. But for me, I'm going to stay out of XP. I'm going to keep buying into New Holdings, and I'll be a happy camper there. Any thoughts on XP? Is that a stock that you have any charts on?
Yep. So I drew this while you were talking. I've gone back 5 years and I found this peak here. And I drew a trend line across there. Look how many times it's been tested as resistance. 1, 2, 3, 4, 5, 6. It cannot seem to break above that trend line. So that's nearly 2.5 years worth of data. And then a much shorter time frame where we have an upward trend is basically from January of this year. And it has found support there at least 3 times. It is trading at the upper end of this channel. I'm going to go back to just 1 year now that you see where I have the lines drawn. The 21-day has been moving higher and starting to roll over. The 5-day already has, after testing this downward trend line, as resistance. So it is on a downward trajectory at the moment. So this upward trend line is probably going to come into play here at some point. The RSI is finding a little bit of leveling out here right below 50. So that's in bearish territory. We did move into bullish territory on the PPO. But one thing that concerns me is this bearish crossover right here. So even though we're in bullish territory, we are getting a bearish crossover at the moment. The accumulation has been on a downtrend as well. So it's been in decumulation since the peak back May 19th or so. So that's what I'm seeing with the charts. It looking like it's going to find some lower prices here pretty soon.
Okay. Thank you, sir. Great job today. And just to put a final bow on an awesome stream, thanks everybody for tuning in and making us a part of today, which is NVIDIA earnings day. Really appreciate it and hope you return to see our streams. We focus on fundamental analysis and charts. We do the big names for watch parties, as well as we tend to stream in the morning, 9 a.m. Eastern. And you've kind of observed our format. Looks like the market for futures is trending higher. NVIDIA has reignited the whole AI trade, put it into a faster gear. Looks like tomorrow we should open in the green. NVIDIA is trading higher, 5.24. So investors are piling into the stock, and it's going to drive the semiconductor space higher. So we should have a green day tomorrow, unless something surprises me and the market goes lower. So with that, thanks again, Daryl. Great job today. Everybody have a terrific evening, and we will see you on the next live stream soon.
Take care.